how to invest £1,000. Now, how you do anything is how you do everything. So don't underestimate the power of investing 1,000 well. I get asked all the time, how do you invest X? Someone asked me recently, how do you invest 800 grand? I gave them a bespoke plan. So I'm going to share with you how to invest 1,000 well, because it's actually really important, even though it's not a lot of money. Because when you learn to invest 1,000 well, you invest 10,000 well and 100,000 well. So I'm going to give you 4 or 5 different things that you can actually squeeze out of £1,000. You'd be quite surprised how much you can get out of £1,000, whether it's pounds or dollars, although a pound and a dollar is pretty much the same now anyway. I need to tell you something that's really freaking important. Cash money is not an investment. Cash is a depreciating liability, not an appreciating asset. It's vital that you have minimal amounts in cash, i.e. cash savings. Now, some people are quite surprised by this, but that's because they don't understand interest rates and inflation. High inflation, low interest means your money is going down. High interest, low inflation means your money is going up. But then you add into this mix quantitative easing. So any quantitative easing and government printing of money and intervention of monetary policy erodes the value of your money. High inflation erodes the value of money. But then, of course, you've got your expenses and your overheads and the soaring cost of living. And all of these erode the value of your money. So if you keep your money, you are probably losing 15% a year, maybe more. But you're taught to save money at school. You're taught to save money by your parents. Why would you save then? There's 2 reasons why you'd save. Number 1, to teach yourself the discipline of not spending all your money. Reason number 2 why you would save is to build an investment pot. They're the 2 reasons you'd save. Okay, so let's take your 1,000. Now, I'm going to give you strategy and then I'm going to give you tactic. So strategy for your 1,000 is you want a mix of physical and intangible. You want a mix of active and passive, and you want a mix of centralized. Well, you have to have centralized, but you want some decentralized. Now, you don't really have enough money to go high risk, medium risk, low risk, and short term, medium term, long term. So we'll keep it simple. Physical, non-physical, active, passive, centralized, decentralized. And then I'll tell you some specifics to get you started. And by the way, this is not financial advice. This is my experience. Always do your own price checking. Always do your own due diligence and research. Government bonds, cash savings, stock market, they're centralized. Someone else, a company, a government entity, some other power has final control of your money. I mean, property ownership is relatively decentralized actually, because if you own the title deeds, you own the property. But if you have a mortgage, you don't own that property. So I'm going to argue actually the property is centralized, even though I have a lot of property and I love property. And I think property ownership, right, certainly in the Western world, is pretty solid. So decentralized would be anything physical that you hold and you own, and maybe something like Bitcoin. First thing I'm going to recommend that you get into as part of your grand investment is gold. Get yourself a half sovereign, get yourself a sovereign. You can get them from the Royal Mint, get them physical, store them, own them. Bosh. Now, is that going to make you a millionaire? No. But if you had 10 to 20% of your wealth in gold over the years, would that make you a millionaire? Yeah. And then if they do recall currencies, and if they do have bank runs, and if currency does go into hyperinflation, well, you've got a load of gold. Next then is, I'm going to recommend you do have some money in the stock market. But if you look over time, the stock market goes up in value. So it doesn't really matter as long as you're thinking long term. If a price has dropped on something, it usually means it's a good price to get in on. So I'm talking to you here about stuff that's nothing to do with short-term trading. Get short-term trading out of your mind. Buy, hold, die. So the price today doesn't really matter. It does if you want to sell it in a week, but that's called trading, which is actually called gambling for 99.99% of people. So exactly, the best way to buy a stock is to buy a fundamentally good stock and hold it forever. If you put 200 of your grand into S&P 500 or FTSE 100 via Hargreaves Lansdown, i.e. you self-invest it, and you put it in your tax-free wrapper, which in England is called the ISA, and then every month or year you increased it to the point where you can max your 25 grand a year, and then your partner's 25 grand a year, and then your kids' 9 grand a year, and you kept doing that. In the end, you could live off the income from the capital you built up in the stock market. But you need compounding on your side, which means you need to invest and keep it there. You might want to go into emerging markets, 100 in emerging markets, 100 into S&P 500 or FTSE 100. Don't put it in an individual stock. It turns into a risky. I would set up an account on essentially a self-investing platform where you can invest in stocks and shares in your ISA, and you can do this yourself without a broker, without an IFA, and the fees are the minimal. I've had Hargreaves Lansdown account for 16 years. Okay, so with the rest, there's two more things I reckon you could do. I think you could start looking at Amiga Moonswatch. The moon, the sun, and all the planets. So there's, however, that makes what, 9 or 10 different editions, and they're £207 new, which is high for a Swatch, but it's virtually nothing for an Amiga. You can't get one in Amiga. So if you can get one new from a Swatch main dealer, 207 quid, they're already 350, 400, 500. But the reason why I think they'll be solid is, one, Swatch are leveraging up on Amiga's brand. Two, I don't think Amiga will do it forever because I think in the end it will damage their brand. And three, they're already going over premium. But they're actually pretty good. And like, there's no guarantee, but pretty much every watch I've ever bought I've made on, even the bad purchases. I've bought a lot of watches over 16 years. It's a big passion of mine. So for that kind of money, you can't get much better. And it's physical. So you've got some physical gold, physical watch. Then you've got the centralized and intangible of the stock market. Now, you don't have enough money for real estate yet. You don't have enough money for many other classes. You could put 100 into Bitcoin, which is 10%. And I would see that as a reasonably wise move, because at least you're in some crypto, because you might think crypto's the future. But the problem is all the others are too risky. They're not decentralized, and people think they are, but they're not. Ethereum, some billionaire owns that. It's not decentralized, but Bitcoin is. So maybe you want 10%, 100 in Bitcoin. And if you've never invested in Bitcoin, it's good to learn how to invest in it, get your wallet set up, and get your security done very well. I want to stress this decentralization because people think they know what it is and it isn't. If a billionaire owns a crypto platform, that is not decentralized. Let me just make that really freaking clear. Because they own it, they can manipulate it, they can create more of it, they can go bust. Bitcoin is, because no one owns it. And some people say, oh yeah, but the blockchain is decentralized. No, it's not. The blockchain isn't decentralized. Bitcoin is. Imagine if the government set up their own blockchain. Do you think that's decentralized? No, the government own it. Do your own research on that. Okay, so you've got a couple of hundred left, I reckon. Two more things I recommend you do. When you've got a little amount of money to invest, what you need to do is leverage knowledge. Because the more you learn, the more you earn. How you do anything is how you do everything. But you remember earlier I said active versus passive. Well, with £1,000, you're not going to make much passive. It's going to take decades of compounding to get anything decent. So you need to leverage a bit of sweat equity, a bit of active. And that would be starting a business. Now, with a couple of hundred, what business can you start? You can't buy much stock, you haven't got overhead, premises, staff, you can't do any of that. So the best business model to start, literally on a couple of hundred, is a membership site. Because it leverages information into income, content into cash flow, and it leverages IP. Some people call IP intellectual property. I call IP information profits. So for less than 200, you can set up a membership site. You can get the hosting, you can get the platform, the payment gateway, and the merchant for less than 200. You can do that. And that's probably the best use of any of the grand that you've got to invest. And that's the active part. So the final part, you are your best asset. Invest in yourself wisely because you pay yourself the best return. So you want to make sure that actually you see yourself as an asset class. Because if you know more than anyone else about watches, you'll buy low and you'll buy the right type at the right time and it'll appreciate in value. If you know the most than anyone about crypto, you'll make the right calls more often than not. And this is why I launched Rob.team in lockdown. I was doing 20 million quid a year in information courses, physical training, physical courses, masterclasses, thousands of pounds a time. But when lockdown happened, I realized, well, one, I can't do a physical course anymore. That's shut down by the government. But two, people are going to need help online and probably at a lower cost. And since then, I've grown to nearly 10,000 members. So I invite you to be one of them. I hope you found this session interesting and useful and practical on how to invest £1,000. So I'll see you there. Thanks for tuning in. And remember,